Investors and traders, welcome to the channel Market Chart Pattern. Today is 2nd of January 2024. It is the first trading day of the year, and the first trading day of the year has concluded. So we are going to do our daily recap today, and just to remind everyone, this video is for educational purposes only, and it is not a financial advice. So let's actually take a look at and do a recap of how the major markets did, and of course our focus is on the US markets. So we'll just quickly go through this chart, and what it illustrates is basically we saw bonds being sold off. We saw strength in the dollar, so dollar stabilized and rallied today, and we of course dollar is pegged against, not pegged against, but dollar is a pair against the major currencies such as Euro USD. When the dollar goes up, the other currencies go down in value. So this chart illustrates that how much they have gone down by. The figures which are in red color, this means a decline or a negative number, and the ones which are in green means a positive. So dollar higher, bonds lower, Euro USD lower, USDJPY higher, and this is the GBP well, I've got it wrong, it should be GBP USD, need to correct that, and that was lower as well as the dollar strengthened. This is something which we discussed in our weekly video as well. We'll do a quick recap. And the stocks were under pressure, and of course when the dollar was rising, stocks came under pressure, and the bonds sold off as well. So bonds are selling, the dollar is higher, and the stocks sold off as well today. So what we see is S&P 500 lost 27 points. This is the cash index. And on the ESF futures, the E-mini futures, 24.24 points. Nasdaq, these are the NQs, Nasdaq 100 E-mini futures lost 272 points or 1.6 percentage points. Dow Jones was actually one of the stronger ones today. So this is the only index which closed in green, so 31 points, but by not a huge margin, and 0.08%. And Russell 2000 for the small caps lost 14.7 points or 0.72 percentage points. So let's actually quickly also look at the charts. In this video, I'm not going to go through the patterns in detail. We'll just quickly have a look at the charts, and we'll just start from the bonds first. So this is the 30-year or long bond futures chart, and we discussed this in more detail in our weekly video which we did yesterday. And what we can see is we were discussing that it's reaching these symmetry points. Chances are it might actually still get to about 128, even 133. But look at the number of weeks it's been up, and some sort of pullback might be due. And we'll just quickly have a look at also the VIX index here. So VIX on the daily basis, what we can see is that as the indices were selling, there was a higher pressure, so it actually did rally, but towards the end of the trading day it just sold off. Looks like perhaps today was just first trading day of the year after a long holiday. So maybe people were digesting news and maybe taking some profits as well, because we have had a fantastic rally taking place in the third quarter towards the end of October, and it's just been fantastic. Look at this chart, look at this rally starting from 27th of October to Friday, and it's just been amazing. So this is the S&P 500 E-mini futures chart, and here what we're looking at is basically some pullback. Just quickly visiting the weekly chart as well. And in our yesterday's video we also discussed these standard deviation numbers, and I had done a chart which also described standard deviation levels to +2 as well. So that's basically adding the points by multiplying each one standard deviation point, which I've not mentioned here, but they are available in the chart, by 2 to get those numbers. And what we can see is that it's still in the range. 47.29 is the kind of -1 standard deviation, so within the range. However, the NQs had a bigger pullback today. It was 1.6% in the negative territory today, and what we can see is that we had a -1 standard deviation of 16,710, and it went as low as 16,622 and a half or 50, which is actually taking a little bit lower than the -1 standard deviation, but still above the -2 standard deviation. So it's within that discount window where it is getting pulled back into, and it's possible that over the course of next few trading days, or even perhaps tomorrow, we can still see more selling pressure come in, which could in fact see maybe a couple of 100 points to 300 points taken off from this index, and it would still be within our range of -1 to -2 standard deviation. And one of the things that I wanted to mention, but it's on the daily chart here we go. Let me do this, and if we just draw in our normal Fibonacci, what we can see is basically this index just pulled right towards the 38.2% Fibonacci retracement from these lows here. This low right now, it just came very close to that, and of course, as we discussed over our video over the weekend, this 17,250, which we had identified using our Fibonacci expansion, the market had actually come very close to that, and we were expecting some sort of a pullback to take place. Also, just on the weekly chart, really look at these were the all-time highs back in November 2021, and we have actually breached above these, and yeah, some sort of pullback can take place, and this is what we have seen so far. Okay, let's take a look at the Dow Jones really quickly. Dow Jones, here we go. This one was actually one of the better performers today. It is the only one which closed in the positive territory, but 31 points, 0.08%. And here, what do we see? We see basically just indecision here. One of the things that I would like to highlight again, that Dow is actually very close to completing. In fact, you can say it has perhaps completed this bigger ABCD pattern formation right here, so it's within that zone. So we could see pullback happening in this market as well, and the other ones are near or exceeding some of those Fibonacci numbers. We have spoken about that in detail, so I'm not going to go through in details of those again. And then finally, let's take a look at the Russell 2000. Let's do it on the weekly chart here quickly. So here Russell has been in a really tight trading range, and what we have seen is kind of pull back into this trading range, and the low was today 2022, and it's still within that and not even reached the -1 standard deviation. So it looks perhaps some sort of profit taking being taking place today, and then tomorrow is of course going to be Wednesday. I was gonna say Tuesday and turnaround Tuesdays, but we'll see. Maybe Wednesday will take place because of the longer weekend we had, and the wonderful Wednesday could become the wonderful Wednesday where we could see some sort of turnaround. We'll have to wait and see, but it looks like the markets are within the kind of range we were expecting per the standard deviation, and perhaps there could be more downside as well. That's also possible. Look at this chart. This is the dollar index, and over the weekend on the weekly chart, let's just quickly recap very quickly. We were looking at this situation here where it had actually pulled back right into this zone we had identified, which is actually a gap from this candle body to this week right here. And what we were saying was we really need to see a clean break of a 99 figure on closing basis for the dollar to actually get more weak, and the 200 week moving average is just hovering around here. Then we could have a ABCD price projection going much lower, but coming into this zone, we have seen strength coming in the dollar index today. And of course, this is the first trading day, and when it comes to currencies, there are many things which companies are looking to do. For example, they need to transfer funds around, so they might be actually squaring their positions in terms of actually a month end and then year end and then quarter end flows coming in. So many things, but what we have seen is right from this level here, this structural support acting as support, and a fantastic move to the upside at strength coming in the US dollar. Bonds also sold off, and of course indices came under pressure. So this is what we are looking at in terms of the price action for today, and I wish you good luck and good trading. But I will really quickly, very quickly, try to show you something, and I will just move it to 30 minutes duration. Here we go. This is the futures Treasury bond future, and I basically just quickly wanted to show you one thing here about the pattern formations. I'll just get this 1.618, and there we go. That's exactly where the bottom was. So that's why we really like to look at these ratios. And if you were trading this or watching the market on intraday basis, one of the other patterns that we were watching for, or actually I was watching for, was this ABCD, which completed a little bit higher, and of course the market went a little bit lower, right to 1.618 expansion. So just to show you that although we focus more on higher time intervals over daily, weekly, but these patterns actually work, these ratios work very well shorter term trading basis as well. So thank you very much for watching the video. Good luck and good trading.